Hello, I'm Juliet Sarli. In this week's edition of IG Macro Intelligence, we take a look at the tariffs imposed on Canada, Mexico and China by the US administration and the market implications. Over the weekend, US President Donald Trump followed through with tariff threats, imposing levies of 25% on most goods from Canada and Mexico and 10% on Chinese exports as well as on Canadian energy. President Trump also announced he would definitely be imposing new tariffs on the EU without specifying the exact level or timing of the tariffs. Canada and Mexico swiftly pledged to impose retaliatory measures, while China announced plans to challenge Trump's tariffs at the World Trade Organization. However, in a sign of how turbulent things may be under President Trump, a late truce pausing the introduction of the tariffs appeared to be agreed with both the Canadian and Mexican leaders. In the immediate aftermath of the announcement, the US dollar rallied, sending Canada's looning to a 2003 low, while the Mexican peso fell more than 2% to its lowest level in 3 years. The greenback also surged to a record high against the offshore Chinese yuan, while the Australian dollar, often seen as a proxy to a trade war, plunged to a near 5-year low. The Aussie dropped to below 61 cents, breaking through the January low of 61.3. This marked its weakest level since 2020, when it briefly approached 55 US cents during the early days of the COVID-19 pandemic.
For now, we don't see that having a direct impact on the RBA rate cut decision. And there are two simple reasons. One is that we have very limited direct impact, trade impact with the US. We actually have a trade surplus with the US. So we're probably not going to be the target for Donald Trump at the moment, unlike Canada or Mexico or China. And second of all, the trade weighted index, which is the Aussie dollars versus our main trading partners' currencies, that hasn't fallen as much compared to the Aussie dollar against the US dollar. So basically, our trading prices haven't been as impacted.
And in the immediate aftermath, equity markets also tanked and oil prices spiked. This was amid concerns over potential crude supply disruptions from the two largest US suppliers, Canada and Mexico. But gains were limited by the possibility of reduced fuel demand, with Goldman Sachs analysts anticipating the tariffs will have minimal short-term effects on global oil and gas prices. Peter Maguire from XM telling AusBiz volatility is here to stay.
Pretty sure that President Trump wants cheaper oil to really bring that inflation number down. So that's where his mind is, increasing production and all across the shale revolution, taking it up about 3 million barrels a day. So that's his first target for this year, and I just think that it's going to be volatile.
Well, Treasurer Jim Chalmers said Australia would not be immune from escalating global trade tensions, but the government is confident it can navigate the changes. Citi analysts believe Australia can remain fairly protected in any potential trade war due to its deep political ties with the US and the fact it runs a trade deficit with America, shipping only 5% of total exports to the United States. Still, investors are concerned about potential implications, with sent shares like Fisher & Paykel Healthcare and luxury retailer Cettire sharply downwards during Monday's trade. Fisher & Paykel manufactures about 45% of its medical devices and systems in Mexico, with the remainder manufactured in its home base, New Zealand. Morningstar decreased its full year 26 gross margin forecast for the company, estimating it earns around 42% of its revenue from the US and about 60% of US volumes are supplied from Mexico. The broker maintains its fair value estimate for the stock and doesn't expect its market position to be significantly impacted by the tariffs, as it maintains over 70% market share in its humidified ventilation technology used in hospitals around the globe. Australian-born luxury platform shares Cettire nosedived during Monday's trade. Despite trying to reassure investors it doesn't have any agreements in place with suppliers in either China, Mexico or Canada. However, it confirmed around 7.5% of US gross sales were related to items manufactured in jurisdictions impacted by new US tariffs, and said it's continuing to assess changes to tariffs on imports. Prior to the tariff announcement, Citi initiated a sell on the retailer, saying that overall too much uncertainty remains around the state of the overall luxury goods industry to give it confidence in recovery for Cettire, which has shed more than 60% of its value in 12 months. ASX TradeWatch data shows limited demand for the stock, despite its recent rally ahead of the tariff announcement. Winemaker Treasury Wine Estates, the poster child of the trade war between Australia and China during the COVID pandemic, is another stock that could bear the brunt of any tariff shocks. However, most analysts are bullish on TWE, with Jarden saying the luxury wine market is outperforming the sector. Meanwhile, as markets gyrate on every announcement coming from the White House, analysts say keep calm and look at the bigger picture. And that is your IG Macro Intelligence for this week. We'll see you next week.